You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is time to rock in the world of futures options. Yes, it is time once again for TWIFO This Week in Futures Options. My name, of course, Mark Longo from the THEOptionsinsider.com, as well as from the network upon which all you folks are mainlining these days. Hope you're having a great trading week. It's certainly been a turbulent one on the broad equity front. So what's going on the other side of the fence, the futures and futures options side? Well, I guess we're going to find out together, shall we? Of course, if you like what you hear, this show, anything else, like a star, comment goes a long way. Of course, if you like any of the sponsors we have on the network, or just the fact that, you know what, they're on the network, you want to reach out to them saying, hey, I heard about you on the Options Insider Radio Network, then by all means, that also goes a long way towards keeping all this content that we have produced for you folks for over 17 years, keeps it coming to you for free. And for all those of you who are hardcore out there who've asked us for years, hey, could you guys offer something above and beyond the traditional network that we can subscribe to and get that's exclusive for us? We said yes a few years ago because we're nice that way. So if you want to go above and beyond, you like that stuff out there as well, you need a little bit more in your lives. Again, it's not for everybody. It's for those few who need it. Dare I say it, must have it. It's there for you because we like you. TheOptionsinsider.com/pro is the place to go. And you know what? Just me on the show this week, which I love. I mean, I love all of our guests, but I also love when I get to run solo because that means I get to drive the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we do just that. We break down everything lighting it up to the light side and to the dark side over there at CME Group this week. And looking at the numbers out here, you might think, given everything that's been going on out there, that we'd be mostly biased towards the dark side. And you would be wrong. It's actually looks like about 60-40 green over red this week. So very interesting stuff out there. And a couple of big movers really dominating the dark side and the light side this week. Let's get to it because it's me. I get to choose. Let's go to the light side. Let's mix it up. Number 5 to the light side this week, listeners, we have getting into the equity sectors. In particular, we have the consumer staples sector of the S&P 500 up about 2.8% since our last show. Number 4 going off to the ags. It's corn, 3.61%. Number 3, it's the utilities sector of the S&P. So if you're wondering what components of the S&P are lighting it up this week, there you go. Number 3 as well, the utility sector up 3.85%. Number 2, back to the ags, KC wheat up 11.47%. You know, if KC wheat's going to be up that much, you probably can guess what number 1 is. Yes, it's the big dog, Chicago wheat up 12.33%. Take that, KC wheat. Chicago wheat, our number 1 light side mover this week. Now to the dark side we go. Back to the sectors. Spoiler alert, a lot of sectors and ags this week on both sides, and maybe a little smattering of metals as well. Number 5, communication sector off 3.41% this week. So again, you have the consumer staples sector and utilities sector of the S&P gaining nearly 3%. Or in the case of utilities, over 3%. Communication sector losing about 3.5%. So intriguing, the ebbs and flows in the S&P. Number 4, back to the metals we go after a couple of weeks of really hanging out in the metals a lot. We're going back this time to platinum, number 4, off 3.44%, just barely outpacing the communication sector to the dark side. Number 3, it's silver. Don't tell Uncle Mike. I was just talking to him on the option block a little while ago. Off 3.53%. People were wondering for a while, when are they going to come for silver again? It's kind of been rallying a lot lately. Maybe it needs to take a bit of a break. Well, I guess it agreed with you this week, off 3.53%. It was number 5 in the other direction last week, still up, but up slightly, up 1.38%. It's been on a good run, so probably due for a little bit of a pullback. Number 2, keeping it in the metals, it's palladium, off 5.15%, so they came for a lot of metals this week. And then number 1, back to the ags, class 3 milks are going to the dairy, off 10.64%. My goodness, what a couple of weeks it's been for Class 3 milk, because it was number 2 in the complete other direction last week, up 8.11%. So it gained almost 10% last week and gave up over 10% this week. So volatile couple of weeks out there in Class 3 milk. We'll be hanging out there. Let's see. But first, let's move on, listeners, to the CVOL movers and shakers for the week. So what's lighting it up to the light side and to the dark side from a volatility perspective at CME Group this week? Let's find out. To the light side we go again. A number 5 sounds familiar. It's Chicago wheat. The CVOL out there, 38.92, up nearly a full point, 0.92 out there. So a decent move, kicking things off in the ags. Number 4, from the ags, we go to FX. Don't see that too often. It's the yen USD at 11.29, gaining 1.1 points on the week. That's a huge vol move out there in FX land on the vol front. Don't see those too often. Number 3, a frequent offender. It's nat gas. 61.25 is the CVOL there, also up 1.1. So I guess we technically have a tie for 3/4 on our light side vol movers and shakers this week. Number 2, we're going back to the ags, this time to the livestock. It is live cattle. 16.93, up 1.4 points. And the number 1 light side vol mover sounds familiar. We're just talking about it. It is Class 3 milk, 23.7. That's the CVOL out there, up 1.61 points. So something is afoot out there in Class 3 milk. You might have to go check that out this week. Now, to the dark side we go. Let's expand it. Let's go at bottom 6 this week, because number 6 is our old friend WTI at 28 1/3, off about 1/3 of a vol point this week. Number 5, our actual dark side bottom 5 this week, is going back to the metals. It's copper. This time we're getting base. 25, off about 0.43 points on the week. Number 4, it's corn at about a 23.30, off again, almost half a vol point this week, 0.44. Coming in right ahead of it to the dark side, keeping it in the ags, but also going back to the livestock. It is lean hogs. CVOL out there, 23.78, off about 0.45 vol points on the week. Number 2 to the dark side, our first and only rates product this week is the 3-month SOFR at a 96, pretty much even, off 1.05 vol points on the week. And the number 1 dark side vol mover this week at CME Group, heating oil, at a 27.78, off 1.45 vol points on the week. So there you go. There's your volatility movers and shakers for the week over there at CME Group. And now it's time for us to kick things off. I think you know where we have to start, listeners. It's in the ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, as the man said, it is time to get our hands dirty talking about a little bit of ags. Head on over to cmegroup.com/TWIFO, TWIFO. Once you're there, listeners, pop into that asset class dropdown. And guess what? It's an alpha order list. So ags, pretty easy to find right at the top of the list. Then in product family, we're going to go to grains and oil seeds. We're going to kick things off in Chicago wheat, listeners, because it was moving and shaking. It was our number one light side mover this week at 12 1/3% on the underlying side, and came in at number 5 on our CVOL light side movers and shakers this week. So obviously a banger week out there from an underlying and from a vol perspective in Chicago wheat. Was it delivering, though, on a volume perspective? And the answer is a resounding yes. 224,000 contracts on the tape already out here in Chicago wheat. So a pretty active week, all things considered, out here. And you 0-day fans will be happy about this. In an unusual move for ags seem to be usually a little bit longer dated paper flow. Not this week. 34% of the flow went up in the contract, the May contract, that is going away in 1 day, listeners. So expiring on the 26th. So there we go, listeners. Got some effectively now 0-day flow. I know it's not. Save your letters, save your emails. I know this contract was listed all week, didn't just list today. Has 24 hours to go now, though. So it is effectively, as we're talking about it, a 0-day contract. But still, intriguing stuff nonetheless. I get it. Save the emails as we get on into a little bit of Chicago wheat. What was lighting it up out there this week? Like we said, listeners, 34% in that front 1-day contract. Kind of hard to sink our teeth into that from a vol and skew perspective. If you're curious, the vol out there is a 37 1/3, up 5.6 points. But again, vol in 1 day, kind of meaningless. The call, 6.3% bid. The put, 6.7% offer. So there you go. There's your 1-day skew and vol breakdown. Let's go a little bit farther out, though. Let's go out 29 days to the June contract. That did 22% of the flow. And then actually, let's go beyond that. Let's go to July. This is more what I expect. 33%. So right behind, 1 percentage point behind the 1-day contract is the July contract. Has 57 days to go. They did 33% of the flow. So a very active contract. That's more of what we expect in the ags. That future's at a 620 3/4. By the way, the front future going away tomorrow at 602 1/2. So a decent little spread, about 18 1/4 points between these two futures here. Vol-wise, going out to July, that vol is at about 35 1/4. So still frothy, up 4 1/4 points this week. Skew-wise, the puts last week, 4.8% cheap. This week, 6.3% cheap. And the calls, 7.9% bid. So a lot of love for the calls last week. This week, that seems to be dwindling somewhat. But you know what? It's still effervescent. It's still bid out there. The calls, 6.3% bid. So calls bid, puts offered. Again, we see that a lot in the ags, also in the metals. And it's nice setup for, of course, if you want to do a little bit of collar action, get some cheaper puts and some more expensive calls to write. That works out pretty well. So if you're into that kind of thing, looks like Chicago wheat setting up nicely. Again, it's not the best setup. We've seen double-digit bids for the calls and that kind of discount for the puts as well. Not quite that, but looking better than, let's say, a traditional equity, which is flipped the other way. And in terms of action, what is leading the dance out here this week, listeners? Shall we find out together? It's out in July. What's kind of a bit of a toss-up. July 650s were pretty active, but we also have the pars, the 600 calls going out today, doing 12,000 contracts this week. Seems like folks were pretty much bailing on these all week long, which makes sense. We are north of the 600 handle now, 602 1/2. So 2.5 handles past it, but nonetheless breaking through it. So looks like some folks bailing. Either they were long it, they want to get their premium, get the heck out of Dodge as the underlying is moving before it expires, obviously tomorrow, or they're short it and they're just panicking. They want to get the heck out of Dodge. Either way, someone closed about 4,000 today, 3,300 yesterday, 3,000 on Monday, and about 2,000 on Tuesday. So folks bailing on the par calls expiring tomorrow pretty much all week long. And then right behind that, we have the 650s, the 6.5. So this makes a little bit more sense. This is more of the traditional kind of paper we might see out there, where the future's at 620 3/4. And we see these 6.5 calls, these 650 calls doing about 10,000 contracts out here this week. So a pretty robust week. 10,580 to be precise. Not much today, which is weird, but 4,500 on Wednesday, 3,300 on Tuesday, and about 2,200 on Monday. Again, all opening. So maybe some of the folks who were bailing on those 600s, those pars in April are rolling out to July because it was opening all week long. Certainly could be some of that flow going on out there as well. Either way, a lot of paper, a lot of opening paper out here in the July 650s, and then right behind it we have 9,300 of the 700. So the July pars going up as well. Looks like there was a 650 700 vertical that went up yesterday, 4,547 times. Looking to see if anything else. Looks like also could have actually been a ratio. This is a weird one. The 600s went up 2,800 times yesterday. 7/2 went up 2,600 times. 600s were closing. 7/2 were opening. And then the 6/2 and the 700s went up 4,500 times each. So it'd be a funky ratio if that was. It'd be almost a ratio kind of call fly. It seems definitely the 6/2, 650s, excuse me, and the 700s were a vertical. Looks like opening on 650s, closing on the 700s. So maybe a bit of a roll down, 700, 650. Interesting time to be doing that. Again, that future's at 620 3/4. So still substantially out of the money, but maybe taking advantage of an opportunity. Not sure why we'd be rolling those down now, but interesting stuff as well. Opening on the 700s on Monday, 3,300 of those, and about 1,000 on Tuesday, and a couple hundred today. So intriguing stuff out there. Either way, there's almost 10,000 of the 650s open right now, and about 4,000 of the 700s. So read into that what you will out here. Listen, let's scroll around a little bit, see if we see any other interesting and or aberrant paper lighting up our tape. You like the 540 puts in June? They went up 2,700 times this week, listeners. So maybe some folks overwriting a little bit of put action out here. Again, those are about 80 handles out of the money. And then we also saw about almost 7,000, 6,700 of the 590 calls. Again, these are expiring tomorrow, going up this week as well. The big day for those was yesterday, 2,100 actually opening. So opening, they were closing about 2,000 on Monday, closing about 1,100 on Tuesday, and about 1,500 going up today against an OI, a remaining OI of 2,600. So this is a lot of very near-dated flow here in Chicago wheat, which again is interesting and not something we typically see out here in the ags, but that's why we run the numbers. And you know what? We haven't checked in on our old pal corn in a while, listeners. Let's do a real quick hit there as well. That was number 4 on our light side movers this week. And also, traditionally, the big dog out here in the ags complex. Is that still the case? I guess we'll find out. Go into that drop down, pop out a wheat, and they're going to go up a couple of slots here to corn. And the answer is still yes, 406,000. That's a pretty decent week. It's not a blow the doors off week for corn. It's about what we expect, but still, it shows you who the big dog still is out here in the ags complex. Corn 441 1/4 right now, up 7 3/4, or about 1.8% just since Monday. Obviously, if you go back to our show last week, it's up about half that, about 3.6%. In terms of paper, 408,000. The big dog, again, the contract expiring in about a day. So what's up with the near-dated flow in the ags? Interesting. May contract getting a lot of love. 27.6% of the paper out here, including 20,000 of the 430 puts. And again, we're at a 441 1/4 with a day to go in this contract. So yeah, those 430 puts, there's nothing else even close in terms of volume, and next closest is less than half. Wow, 430 puts, that's where the action was. I guess we're talking about some vol with a day to go, listeners. That vol is 26.6, up about 8 1/4 points. The skew, the calls last week were 7% bid, this week 4.8% bid. The puts last week, 6% cheap, this week flat. So puts losing their discount, which is kind of interesting. If we go a little bit farther out, let's see, there must be some other months that have a little bit more flow that we can also talk about that have some vol. Let's go out to July again, about 57 days to go. That future's at a 452, if you were wondering, up about 9.2 handles on the week. And that vol's at a 24.4, up about 1.4 points. And the skew last week calls 8.3% bid. This week, still about 8% bid. The puts last week, flat. This week, 7% cheap. So kind of swinging the other way, which is kind of fascinating. Maybe we got some roll action again from the front week to July. But right now, it's the 430 puts, lighting it up this week with a day to go. 20,000 of them. The big day was Monday, over half, 10,500 going up on Monday. Again, folks bailing on these like they're going out of style. 3,600 on Tuesday, also closing 5,000 on Wednesday, 1,100 today. Again, they were closing all week long. Today's volume is against a remnant OI of 13,600. So they still have quite a few open on this track with one day to go. So let's hope there's a lot of shorts and they're just riding them to oblivion, because if they're long, those bad boys. Well, I mean, it's 11 handles. I guess anything could happen. That'd be a big move for one day to go with corn, but we've seen crazier things out there in these markets. And then number 2, listeners, actually buried behind those were the 435 puts. So actually, I take it back. But number 2 were the 440 calls. It was all papered very near day this week. 440 calls going up 17,000 times. The big dog was today, 7,100 against an OI of 13,400. So the OI on the 440 calls and the 430 puts, eerily similar. 13,400 the calls open, 13,600 of the puts. That's very interesting. Folks are bailing on the calls all week as well. 4,500 on Monday, 2,800 on Tuesday, 2,800 also on Wednesday, and again, 7,100 today. So folks bailing on all these one day to go contracts, which it makes sense. Not much time to go. Got to get out of Dodge before they close the door on you. But still, just a ton of near day to flow. 435 puts doing about 14,000 contracts. The big day was actually Monday, where they were opening the 435s 5,800 times. Opening and then closing the 430s 1 by 2 the same day. Probably not. 3,200 on Wednesday closing, 2,500 today against an OI of 6,600 and about 2,200 on Tuesday also closing. So folks were just bailing across the board on everything in May with about a day to go. Wow, fascinating. And then, like I said, they were opening a little bit farther up in July. So again, probably a fair amount of rolling action out here. If you go beyond the Mays, and this is what I was talking about, everything else is less than half. If you go beyond the May cycle, everything else in terms of most actives, again, less than half. The most active contract outside of that were the 4.5 calls, the 450 calls in July, going up 9,400 times this week. Again, opening all week long, including 4,000 today against an OI of a whopping 24,000. So a lot of OI open there. 1,700 yesterday, 1,500 on Tuesday, 2,300 on Monday, opening all week long. So I would not be surprised to see some of those folks that were bailing on the 440s in May that expire tomorrow, maybe reestablishing here on the 4.5s in July with a little bit more time to go. Again, you're getting almost 60 days. You're getting a much higher future, 452 versus 441. So those are in the money calls now, which is also an interesting choice out there. And then behind that, we have the 470s going up about 9,000 times this week. The big day, weirdly enough, was Wednesday, 4,700 on Wednesday, 2,200 today against an OI of 15,000, about 1,400 on Tuesday. Not much going up on Monday. So looks like most of that action was yesterday and today here on the 470. So again, funky paper here in corn. And if that's not enough for you, let's go all the way out to D. So this is the kind of paper we expect in the ags. A little bit longer term, lining up more with some of the planting and harvesting cycles out here. It's the Dees pars, the Dees 500 calls. Again, the at the money strike, that future is at a 475 in December. So 25 handles out of the money still. The pars going up 7,600 times this week. 3,500 on Monday opening, 2,800 on Tuesday, and about 1,000 today against an OI of 25,000. So 500 calls in December, listeners. Futures at 475. And you got some time to go on these. You got 211 days. You like those? I'll have to go dig and see what prices those went up for, listeners. But intriguing stuff. Let's hang out in the ags again really quickly because, as we mentioned, something is afoot in another part of the ags, in particular dairy. Number one to the dark side, off 10.64% this week. And then also lighting up our vol movers and shakers this week. It was number one to the light side. It's, of course, our old friend Class 3 milk. So pop out of grains and oil seeds in the product family for the ags. You're going to go to dairy. You're going to see Class 3 milk right at the top there. What's up in Derry? What's up with our friends to the north there in Wisconsin? What's crushing Derry out here? And you know what? For all that Sturm and Drang, you would think it was generating a little bit more paper out. And I guess comparatively for Derry, it is a lot. It's about 8,000 contracts. So not lighting the world on fire. But for Derry, 34% of that going up in the contract, the May contract that has, looks like about 40 days to go. Some of these expiration cycles in these different products are kind of funky. We're talking about May going away in a day. And now we're talking about May going away in 40 days in the Class 3 milk. Such is the beast out here. If you're wondering, that future that goes away in 5 days at 15.5, going out in 40 days, that future's at 18.25, up about half a point on the week. Yeah, the vol at about a 16, and the skew last week, the calls 1.4% bid. This week, 2% cheap, so they swung in the other direction. And the calls pretty much flat last week and pretty much flat this week as well. Interesting stuff out here. In terms of what the action was, it was the 16.25 puts in May, going up a whopping 416 times. Doesn't sound like much, but for Class 3 milk, that's a banger. And they went up all Monday, Tuesday, and Wednesday. Nothing today. 233 on Wednesday, $1.46 on Tuesday, a whopping $1.46 on Monday, whopping 30 on Tuesday. All of that closing. So folks bailing on these 16-quarter puts with about 40 days to go. And it looks like they were opening on the 18.5 calls, going up about almost 400 times as well. So maybe a bit of a risk reversal, or maybe just bailing on the puts and opening on the calls. Either way, intriguing stuff out here in everyone's favorite Class 3 milk. Got a little bit of time left in the show here, listeners. We probably can squeeze in one more. Looks like the rest of our light side and dark side this week dominated by a little bit of metals. Let's head out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals, and you know where we're going next. In honor of our buddy, Mr. Uncle Mike, we got to head out there to a little bit of the old silver, giving up the ghost a little bit this week. Again, not entirely unexpected. Pop out of the ags, go almost all the way to the bottom of the list, one from the bottom. Going to get metals, going to go precious, and then two down from the top, you find silver, which right now is at a 27 2/3, off about $1.45 or nearly 5%. Just since Monday. Of course, you go back to the end of our show last week, it's off about 3.5%. So a little bit of the bloom coming off the rose, but it's been quite the rose over the last couple of months out here in silver. So you can't look too askance at it. 57,000 contracts, so the volume's starting to come back down to earth as well out there. It was like 34% of that going up in the July contract. So July getting all the love today, which has about 61 days to go. In terms of vol, that's at about a 27.41. That's giving up about 1.7 points, looks like, on the week. So that's a pretty decent vol move for silver, which is not typically a bastion of vol, but also more volatile than its big sibling of gold. In terms of skew, you know the calls are going to be bid, the puts are going to be offered. It's always just a question of how much. And last week, the calls were about 11% bid. This week, 13.1% bid. So the calls catching a little bit of a bid. The puts last week, 6.6% cheap. This week, 8.5% cheap. So that could be a reflection of just rolling down the skew curve, or it could be a consequence of folks want themselves a little bit more calls and not really loving the puts as much. Let's find out, shall we, listeners? In terms of the action out here in the metals, it was the 35s in July that were leading the dance. So 35, in light of this week's action, perhaps seems like a bridge too far. But again, we have till July, so we got some time to hit that 35 level. Looks like folks were opening out there, so intriguing. 35 strike by July expiration, listeners. You like these? Either way, 35's going up 5,000 times this week, almost 3,000 on Tuesday, opening there in 1,700. So most of that in 2 days. Worth noting, 1,500 of the 32 halves went up on Tuesday as well. So 1x2, it is possible. 32 half, 35. Usually that's buying one, selling two if you're going to do that. So you probably have futures against that in your back pocket. So maybe a little bit of a ratio repair style trade. Otherwise, you just net short units to the upside. I know Carly Garner likes that, but in that case, but I'm not a huge fan usually with her ladders out there. But so that's usually done with some futures in your back pocket, in which case that could give you a cheaper way to break even a little bit lower. Or it could be to straight up net short units 1x2, or it could be completely unrelated paper. Either way, about 1,600 of the 32 halves going up on Tuesday, almost 1,000 on Monday, and about 500 on Wednesday. So upside paper as we expected. You know what? Let's do a little bit of quick digging because there isn't a ton of paper out here. I would love to, whenever possible, give you folks a little bit of price action on some of these things. Sometimes they can be hard to ferret out exactly what they were up to on the price side here. But luckily, if they went up, easiest to find, they went up on the block trade side. So why don't we do a little bit of digging out here if my system wants to play ball with me, listeners. And again, if you look at these tools, listener, if you go over to bandtix.com, you can really scan for a lot of cool stuff out here, like we're doing right now out here in the precious. By the way, I need to change the date because this all went up, we said, on Tuesday. So let's go back to the 23rd. We scan for today. We're not going to find it, listeners. 34s, looks like paper was, these were the Dees 34s. So these are a little bit longer term, going up for 90 cents. I don't see the blocks going up on Tuesday, listeners, for the 32 halves and the 35s that we were just talking about. That would be fascinating to see exactly what they were up to out in those names. Looking a little bit farther out, let's go, let's say, to Wednesday, the 50s. Looks like somebody traded a block of the June 50 calls, 5 O's, 1,100 times for 2 cents, a whopping 2 cents. That was on Wednesday. You like those, listeners? I don't know, 50, that may be a bit of a bridge too far. By June, what would be going on in the broad global economy for silver to threaten a 50 by June expiration, listener? Let's go a little bit farther out. Let's go to 24s. We've got going on, and more 50s trading today. Another 100 lot, this time for 1.5 cents. Looks like they bought the 30-34 today. The July 30s were trading for 60 cents. 34s were trading for 17 cents. So that gives you a little bit of a frame of reference for the prices out here. But yeah, I can't find it because it didn't go up as a block, so it wasn't a 1x2. But there's a little bit of a sense for the prices out there, listeners, in, as Uncle Mike calls it, the thief in the night, known as silver. All right, that is going to do it for us here on the old TWIFO program for this week. Kind of just the facts, get you in, get you out, even though we ended up going 40-odd minutes pretty much anyway. I can't help it, listeners. I have too much fun breaking down the paper with you folks out there. Hope you're having fun. Listen to us. If you want more fun, don't worry. Our week not done yet here on the network. We'll be back again tomorrow for Vol Views, talking a little bit of volatility. If you're one of the many who's written in saying what's going on, also not just from a domestic, but from an international volatility perspective, might want to check out Volatility Views tomorrow or after the fact on whatever podcast device you get this on, because I might have some fun stuff popping off over there for you. Who's going to join us on the show tomorrow? Got to tune in to find out. And then after that, exclusively for our pro folks, theoptionsinsider.com/pro is the place to go to get access to that. Of course, you can get Options Oddities, where we break down a whole bunch of weird, funky, and unusual trades out there. That's going to do it for us today. Like we said, back again with all that fun stuff tomorrow, and then back again next week, where I will be beaming in from the Options Industry Conference down in Asheville. So should be intriguing out there. We'll see how the connectivity holds up for the live. You'll definitely have one coming at you on the on-demand side either way. So I'll be recording that from Asheville next week. Who knows? Maybe I'll have some fun special guests with me. We shall find out. And then back again in 2 weeks live on the same bat time, same bat channel. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.